Hi, I'm Scott. I'm new to the group. Just thought I'd share a little bit, maybe get some feedback. Um, I am typically a swing trader using primarily the daily chart for the higher time frame, 39-minute for the lower time frame. I typically use a combination of supply and demand trading or smart money concepts and a couple of indicators that I have developed for myself. For today, I'd like to just show what I did yesterday with a friend of mine intraday with a paper trading experiment um, that we used the supply and demand turned out all right. So any input you have, things you like, things I may have missed or could do better, any input is appreciated. If you look at this, I had already on the 39-minute chart, I had already had some drawings going where I was picking out some support and resistance. Mind you, this was yesterday, and some order blocks, excuse me for the smart money concept here. So we were right about in the middle of the day where this vertical line is, where we started talking about it. So as we were talking intraday, we decided that we should be looking at the 5-minute chart. So when you do something like that, I'm going to switch the 39-minute chart over here and zoom in just a little bit on the bigger picture so you can see the end result. White areas is regular trading hours. Yellow areas are extended trading hours. And I'm going to switch over here to the chart we actually were trading by paper on 5-minute chart. So this was the end result. Again, this vertical line here, that is the place where we started talking, trying to decide what we're going to do for the rest of the day. So what I'll do, since we're going to focus on the supply and demand concept, I am going to make this chart full screen, get rid of the indicators, zoom in primarily on what we were talking about. So here you get a bird's eye view of how the day ended, where from where we were starting to talk. What I now is I'm going to go into bar play, going back to that bar where we last were, bigger. Okay, since what I had already planned was a lower target down here, we had decided to take a look at that. We were here saying, okay, where could this go? We see a bounce coming. We have relatively equal lows here and here. So we know there's some liquidity right below there. Going back with the supply and demand techniques, going up to the top, we've got some liquidity sweeps here and probably the first order block, bigger. Okay, make this a little bigger. And we're here. Probably that first order block is right about in there. As you out. It didn't take but two candles, and that was already mitigated. You can see that tail comes up into that order block. So that is already mitigated. So stop looking at that. The next order block coming down that could be useful is this one right here from there to there. And of course, that has not been mitigated at any point so far. Just a bit more. And there is a fairly large imbalance between here and the top of that wick or fair value gap, depending on your preference of terminology. So anywhere literally between the top of this order block and this fair value gap in here or imbalance is the potential that we were looking at for this to bounce to. And going down to a little micro scale from the other direction. This isn't necessarily taught in the supply and demand techniques, but it's certainly a possibility to use it. We took a look at this bar directly in front of it where we were talking, and you can almost see So that was at this point here. This is not a quality order block. We are simply trying to hone in where exactly we are, where we should be looking. And what we did was we ended up looking at that block right there. And that block right there is just taking into account this little sideways action here throughout this piece. And it also coincidentally, lines up with that fair value gap or balance area that's in the middle. So the reality is any indication of a liquidity sweep or relative highs in this area would be something that we'd be looking for if it were to go down again. So we're going to just move forward bar by bar, see what happens. So that was the next bar, no action taken. Next bar, no action taken. Still going up. But you see we had this big liquidity sweep right up above that bar, or excuse me, right up above that block into the fair value gap or imbalance and back down. So that is a, hey, here's some attention. Let's watch this closer. The next one, we have yet another little liquidity sweep above the previous day. But of course, it also closed towards the highs. Next day, you have one more liquidity sweep above all of that and a large push down. So this in itself is a single candle order block. So right there, we decided, okay, I think this fair value gap it held. What we're going to do is we're going to buy there. So we're just going to, or sell, excuse me, we're going to go short because we're looking for the lower target. So we sold here at the close of that bar. Typically, on a regular liquidity sweep, we would wait for one bar to close below it to confirm direction. But in this case, because of that single candle order block, we decided we were going to go for it. And of course, it was paper trading, so the risk was much lower. So we're going to go forward. We got a bar down, another bar down, little tail. So these relative lows here and here, they assuming there's some liquidity right below there, that could create another bounce. We did have a little tail there. Let's go to the next one. And so looks like we are getting a little bit of a bounce there. We go up. And another set of relative lows right about the same place there. So now we had to start thinking about what exactly what exactly could be in the way here. Starting back at the top, what I'm going to do is I'm going to eliminate this one because we know that one is already mitigated here. Going back to the top of this turn, this is all a single candle order block right there to there, going out that way. So you have that, plus you have the imbalance or fair value gap in here. So the question is, will that hold? Uh, Something I should have mentioned early on, since we took our trade here based on this, our stop loss would have been directly above this order block here, anywhere up in here. So going back to here, we're going to let this play out some more now that we have entered forward, now up, and we've got a liquidity sweep into that area. Also crossed our original entry there a little bit, but our stop loss is way up here. And looks like after that liquidity sweep into that order block, we have another candle that tried to go up, didn't quite make it to the high and closed lower. So we did a second entry here. So we're going to sell one more. So now we have two open at the close of that block, excuse me, that candle. Popped up again, did go just a tick or two above there, closed very low on the candle, down, but ended up with a liquidity sweep again, probably bouncing off of this little block here, inside order block. Pops up again. Go. Now we're breaking down a little bit. Let's keep forward. Coming down, this was our original target on the 39-minute chart. Definitely coming closer to that original target, and relative equal lows with a bounce back up. So now the question is, what do you do? Uh, do you take your profits? Do you try to wait for target? You are very close to the original target. So probably as an intraday trade, I probably would have normally just bailed out right here, took the profits. We decided to play this out with all the rules and follow our paper trade all the way through. So after we saw this bar, we did the usual. We went starting looking back, going, okay, what's in the way here? What's our next order block? So we know this one has been mitigated up here already. So following it down to the next one, we go down here, and this right here is the next one lower after mitigation. And you come over that way. You do have a fair value gap right in there. Move that out a little bit. Fair value gap or imbalance right in there. And after that, nothing to really talk about. So potential um, could be this. We're, nearing the end of the day. Everybody's got to make that decision. Should you bail? Week again. This is a paper trade, so we decided to play it out, see what happened, and we're going to move forward, letting that go. So step through. So right there, we came all the way back up, bumped into that order block, pushed away again, more like a single candle order block. So since we were planning our target down here, this could be looking like a bear flag. It's got a good solid dynamic liquidity line there. So we decided to sell yet another share there, or contract actually, but let's sell one more there. So now we've got three short contracts going on there, and here. And let's continue forward. So it highlighted yellow here. So this was the end of the day. Now we're into after hours. Depending on how you play, you may have exited there, just to get out for the day, take whatever profits you got, or you never would have taken this last trade being so close to the end of the day. We were staying through after hours, so continue on through after hours. I'm going to go quickly through this because we took no action until the very end here. View. Continue down very close to target. You can see under these equal lows, we did do that break. So that's a break of structure. That there makes this block much higher probability. Again, very close. You can either be very satisfied and take your profits or wait. And here we go. Continuing. And there we go. We dropped down into there. So we've touched our target. Now we've bounced up a little bit. So at target, definitely you've got to be thinking about taking your profits here, because this was the target of the higher time frame off the 39-minute chart. Going to go one more here. So that's definitely a bounce up. What we did was we exit here. So I'm going to flatten right there. So we have flattened there. So we scaled in. Let's see if I can make this visible here. So we scaled in three times, one, two, three, based on the retest two order blocks on the 5-minute that were being developed. And we ultimately were targeting this 39-minute block down here for the target. It did make it there, and we took our profits. And that's what we did. So have yourself a great day. Any inputs appreciated. Have yourself a great day. Bye.